Hi guys, welcome back to TipRanks. My name is Annika and here at TipRanks we love to hear what different stocks you're looking at and your opinions on the market sentiment. If you're looking to hedge your portfolio against the Russia-Ukraine turmoil, then these are 3 stocks that analysts suggest to buy. Now, before we jump into this video, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRank channel releases a video. Russia's invasion of Ukraine has been nearly 3 weeks now, and the conventional wisdom still hasn't settled in on an outlook. But there are some bright spots for investors to hedge their portfolios against this geopolitical turmoil. Let's start with cybersecurity. The first stock is CrowdStrike Holdings and its ticker is CRWD. CrowdStrike was an early entrant into the cybersecurity niche, and since then it's become a leader. The company's Falcon endpoint protection product line is an industry standard and offers customers a wide range of options in solutions for online and network security, with 22 cloud modules available on the popular SaaS model, which stands for Software as a Service. CrowdStrike's services and its revenues and earnings have all been gaining traction over the past year, with the increases starting long before Russia embarked on invading Ukraine, the pandemic-inspired push to remote work, with a consequent increased need for network security, supported the gains. The Ukraine situation will only increase the spotlight on the need for proactive digital safety measures. Taking a look at the company's recent earnings reports for fiscal year Q4 of 2022 will clarify this story. The top line came in at $431 million, and this was up 63% year over year and well above the forecast expectations of $412 million. At the bottom line, non-GAAP EPS was reported at 30 cents, more than double the 13 cents reported in the year-ago quarter. EPS was up for the third quarter in a row. Revenues have been recording sequential gains for the past 2 years. The consistently strong revenues and earnings are reflected in the company's cash position. CrowdStrike reported $442 million free cash flow for its Q4, a company record, and it has $2 billion in liquid assets on hand to close out its fiscal year. The current price for CrowdStrike Holdings is $188.65. The analyst rating consensus is a strong buy, and the analyst price target is $265.71, which is a 40.85% upside, based on 24 Wall Street analysts offering 12-month price targets. We have Matthew Hedberg that is covering CrowdStrike, and he is coming from RBC Capital, and he gives it a buy rating with a $275 price target, which is a 40.31% upside. He wrote that with a record pipeline into Q1 of 2023, aided by the recent Russia-Ukraine situation and consistent track record of outperformance, we believe the bias is towards additional upside to estimates through fiscal year 2023. Overall, another strong quarter as CrowdStrike remains in rare air with outsized growth and impressive margin and free cash flow expansion. The second stock is Raytheon Technologies and its ticker is RTX. This is a stock in the defense industry. Raytheon has a long history of aerospace and intelligence technology. Raytheon designs and manufactures aircraft engines, guided missiles, avionics systems, and communications and surveillance satellites, amongst other advanced products. The company is a major contractor for the U.S. military and provides important weapons systems such as the Javelin and Stinger missiles that have been making headlines in the Ukraine conflict, the Iron Dome anti-missile system, the Tomahawk cruise missiles, and the famous Patriot surface-to-air missile. The defense industry is one of the modern world's major cash cows, and that is an established fact long before the Russia attack on Ukraine. Raytheon has been showing revenue and earnings increases for the last couple of years, and the company's Q4 2021 report released in January was no exception. With the top line of $17.04 billion, this was up 4% year over year. Earnings were stronger, adjusted EPS at $1.08, and it beat the $1.02 forecast and rose 45% from the year-ago quarter. The current price for Raytheon Technologies is $96.69. The analyst rating consensus is a strong buy, and the analyst price target is $108.17, which is an 11.87% upside based on 6 Wall Street analysts offering 12-month price targets. Morgan Stanley analyst Christine Lewag writes for Raytheon's current situation. She said that the US and NATO allies in Europe continue to deliver anti-tank and anti-aircraft weapons to Ukraine and look to replenish stocks. In 2017, the US State Department also cleared $10.5 billion sale of higher-end missile defense systems to Poland, including Raytheon's Patriot system. We see the situation in Ukraine potentially spurring additional FMS for similar higher-end systems. We also see conviction around nuclear modernization spending potentially benefiting Raytheon. We continue to see the ongoing conflict placing upward pressure for FMS and see RTX as best positioned given exposure to missile defense. Given this outlook, she gives it a $124 price target, which is a buy rating and a 28.10% upside. Let's now take a look at the natural gas sector of the hydrocarbon industry. The third stock is Cheniere Energy and its ticker is LNG. Cheniere Energy is a Houston-based liquefied natural gas firm. The impact of Ukraine conflict here should be clear to anyone who's been following the news. Russia is Western Europe's single largest provider of fuel, and the Russian and German governments prior to the Ukraine war were working on the Nord Stream 2 gas pipeline, a Russian project that was intended to provide gas to Europe while bypassing Ukraine. Since the invasion started, the German government has halted cooperation on that pipeline, and the Western sanctions generally are preventing Russia from getting oil and gas products to the world markets. So Cheniere Energy is ideally positioned to gain in this environment. The company's business, as its ticker suggests, is liquefied natural gas, LNG, prior to long-distance transport. Cheniere's assets include 3 gas pipelines totaling over 300 miles and 2 export terminals at Sabine Pass, LA, and Corpus Christi, Texas. The export terminals include storage tanks including 27 billion cubic feet and 4 dock facilities with more than 1 under construction. Cheniere boasts that it's the largest natural gas liquefaction company in the US and the second largest in the world. Backing this boast, the company's full-year revenues increased $9.36 billion in 2020 to $15.86 billion in 2021, a year-over-year gain of 69%. And in Q4 2021 alone, Cheniere saw the top line grow year over year from $2.79 billion to $6.56 billion, gaining 135% over 12 months. The gains were fueled by increases in both demand and prices. Revenues were up, earnings were down in the fourth quarter, and the company showed a net loss for shareholders of $5.22, a far cry from the $1.85 profit that it had expected. The company attributes the losses to the use of commodity derivative instruments and unfavorable exchange positions. Despite the steep EPS losses, LNG stock is up over the past 12 months. Since this time last year, Cheniere has seen its shares gain a robust 73%. The current price is $126.51. The analyst rating consensus is a strong buy, and the analyst price target is $148.38, which is a 17.29% upside, based on 14 Wall Street analysts offering 12-month price targets. Sean Morgan is an energy analyst for Evercore ISI, and he notes that the Ukraine conflict will have an effect of driving European gas consumer towards the US, and that Cheniere is well suited to gain from that in the long term. He gives it a $152 price target with a buy rating and a 19.54% upside from where we're at. So guys, those are the 3 stocks that you can use to hedge your portfolio against the Russia-Ukraine turmoil. If you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. Also, you can check out our videos on TipRanks TV, which is linked down below and in this video, where you can watch all our financial content in an ad-free space. So guys, make sure you do your own research before you invest in anything. This is not financial advice. I hope you enjoyed this video, and I will see you guys in the next. Bye!